Today, I'll be providing you with today's current market update and just a brief of what happened yesterday. So, yesterday it was Monday, right? And my bias was bearish given that prices reached my internal range liquidity, which was acting as this rejection block on GBP USD, right? That rejection block on GBP USD, and on Euro USD having this order block. So yes, price perfectly reached this internal range liquidity, and as usual, if price reaches that point, then I'm immediately bearish. So I would want to see price form a very excellent intraday context that initiates me into taking a trade, right? So that's when two important intricacies came along that made me avoid taking any trade for the rest of the day. The first intricacy is price sweeping London's Asia's low, right? Asian low, right there. Same goes for Euro USD. You can see price sweeping Asia's low. So since I'm bearish, I would want to see price sweep the highs, sweep the buy side liquidity first, then the sell side liquidity. So if price does the opposite, it shows that price tends to do otherwise. It's a simple signal that just tells you that, bro, what you're looking for, it's not gonna happen, right? But rather something that's completely the opposite is most likely to happen. So some would then think, so I must buy. No, you mustn't buy, because if you go on the daily time frame, if you did your daily time frame analysis well, you have no reason to actually be looking for higher prices, right? There's no context that subtends to getting higher prices. So the best thing to do is to just leave the chart alone for that period, right? And another thing that made me avoid taking a trade was the absence of an SMT. You need to get an SMT for you to have confluence of selling in this scenario. The SMT, if an SMT formed, most likely I was going to enter, to be honest, because it's the best way to neutralize any opposing movement that had previously happened. If an SMT would would have happened, right? So with that said, I ended up not taking any trades. So that's it for Monday, right? Simple day, no loss, no profit, no trades taken, right? Now today it's Tuesday. So on Tuesday, which is today, this is my outlook. Let's dig into Tuesday's outlook. So as for Tuesday, um, of course we are starting off from the daily, since it's just a random day, right? Random midweek day. We be starting off from the daily time frame. So as you can see, price has been rejecting candle highs, right? And every time price went below a candle's low, it actually made sure that it made a closure, right? So such closures indicate a bearish state of sentiment in the market, right? Then you can also look at the filling of gaps. You can see that this bearish gap was filled, right? And price rejected below, creating lower prices, showing that there's some quite bearish intention in the market in the current present, right? Then symmetrical differences. Do we have any symmetrical differences that point out a certain order flow? Yes, we have this SMT which arrived today. Look at Monday's high and today's high. That is currently there. You can see that price did not purge Monday's high on GBP USD, but on Euro USD the exact opposite happened. Price purged Monday's high. That's an SMT that indicates bearish order flow coming up, right? So to define the current trend, you see that it is best to define the price as what? As bearish. Price to be actually bearish. And yeah, so then we need to determine the future trend after we've defined the current trend. So we start with the possible order flow shift analysis by reviewing first of all the higher time frame order flow. From the weekly time frame, what did we manage to define of the order flow? I can remember that from the weekly time frame, we were expecting price to be what? To be overall bullish towards this long-term growth liquidity, right? But of course, we cannot deny the fact that we're expecting a short-term movement to this key level, right? To this short-term growth liquidity before price continues bullish, right? So in terms of the trend, we can say that we are totally bullish, right? Then key levels, did we have any key levels? Yes, we have this OB. Let me mark it as an OB. Higher time frame OB, valid OB, mitigated. So definitely it's gonna affect the lower time frames. Every time price reaches a higher time frame key level, it is bound to make a reaction, right? And reaction can definitely affect the conclusions that we can make on the lower time frames, right? So, and the bias, lastly, the weekly bias is bearish. So, with that said, it means that I'm expecting price to continue bearish until what? A certain threshold has been reached, at least this growth liquidity, and even lower, right? Then we also have range dynamics, which we actually don't have. We don't have any range dynamics, but we could use them, right, to point out the order flow. Then billing ranges come last in helping us determine our future order flow. So as you can see, price made this huge expansion to the upside, both from USD and Euro USD. So with that said, you'd want to see price balance this expansion at the 50% or the very discount before price can continue giving us higher prices. And another thing is this valid CSD that we have from a higher time frame key level, this CSD or order block, right? It's a very good confirmation in on the lower time frames that price has changed its state of delivery from being bullish what to being bearish. So then it becomes safe to conclude that my determined future trend is bearish, right? Yeah, it's bearish. So with that said, then we move on to plotting a liquidity matrix. A liquidity matrix is it just points out where I'm expecting price to go. So we have internal range and external range liquidity. My internal range liquidity was this rejection block that you can see right there. And as for Euro USD, it was this order block. Since it's been reached, I'm now looking towards the what? The growth liquidity, the external growth liquidity that exists below Monday's low, right? Yep. So those are my first growth liquidities. Then we move on to order flow to help us refine our growth liquidity. Order flow. If price rejects a high, you need price to go for the lows. So yeah, our low still is intact. It's our growth liquidity. Then dealing ranges. Yes, after price is taken out this low, I can probably look at the dealing range, right? This dealing range. Of course, the growth liquidity will be a bit far away lower, right? Then the last thing is CRT, right? Candle ranges. As you can see, this is the Monday candle, and it's a high probability candle range, the Monday candle. And there was an SMT sweep on this Monday's high. So this gives us a very, very important conclusion to making this a high probability CRT setup, right? This this one is a high probability candle range setup. Right here, right there. High probability candle range setup. So this would be my CRTI, and down there would be my CRT low. So this refines my trough liquidity to its most immaculate form, right? Whereby I'm just looking towards the CRT low and nothing else, right? So in conclusion, I would say price has already taken my short-term draw liquidity, which was existing above Monday's high. Now I'm looking towards the long term, which exists towards Monday's low, right? Yeah. So with that said, we are done with our draw liquidity matrix. Now we are looking at the directional bias of the day, right? The technical directional bias. So we're just using the order flow, CRT, and dealing ranges concept together with the SMT to come up with the technical bias. And of course, with all that combined, the SMT, the key level internal range liquidity that was reached, and the dealing range that needs to be balanced way down there, my daily time frame bias will become bearish due to that. So I'm expecting bearish candles only until the CRT low is reached. I think that's something we would be able to appreciate. Then we can add on a time perspective, right, to just make our narrative stronger. So we have seasonal tendencies as well that give us conviction. We usually expect lower prices in the month of towards the end of April, right? We expect lower prices on Euro and GU, and weekly profiles as well suggest that if Monday is a range and it was paired like this, you'd want to see a reversal, right? You'd want to see Wednesday give us a classic bearish candle going down, right? So that's the time-based conviction that I added on to my existing technical bias, which is bearish, and it turns out that we still stand bearish. Yeah. So with that said, I am clearly bearish on the daily time frame. I need to see price being bearish towards this CRT low. Yeah. So in terms of my daily time frame analysis, I am done. This is my outlook on the daily time frame. Same goes for GBP. So let me just take a picture. Okay. Download image, and also download image. Okay. Okay. That is done. Great. So now let's just move on to the intraday time frame, which is the most important as intraday traders, which is important to us as intraday traders. So when you move on to the intraday time frame, things should be quite easy, right? Should be quite simple, not easy. You now have your daily bias in mind. So you mark your Monday opening, your Tuesday opening, sorry. Since today is Tuesday, your Tuesday opening, which is right there, right? Tuesday opening. Tuesday opening. Yep, this is Tuesday opening. Okay, Tuesday opening. Okay, that is done. So that is Tuesday opening, right? So first of all, I need to consider my order flow first. As you can see, price has clearly been bearish. So it's now about considering if price is going to continue bearish or not. So first of all is the higher time frame order flow. I configured my daily time frame to continue being bearish, right? So I would also want to see price continue being bearish. My bias is bearish. My key levels are bearish as well. So it's perfectly normal for me to continue expecting bearish prices. Then range dynamics. Do we have any ranges at the moment? Yes, we actually do have a current range framework which we are in at the moment. You can see price initially created that high and made this low, made that high, made this low, and continued to make other substructures in between. We have this low, then we have this high, we have this low, this high, another high, right? Another low, which shows consolidation or what we call generation of interest. So that means price is interested in paging at the end, right? And most likely, due to our higher time frame order flow, we are going to see price be attracted towards this low as a much more valid draw of liquidity. So with that said, range dynamics also gives me conviction for lower prices, and SMT, with that same SMT from the daily still remains right.